smart, took advantage of that trade and made some quick money immediately. The trade we shared were not just fictitious trade for fun. It was what we were learning that I posted. And I said, well, for those that are in doubt, they can as well enter with demo account and be sure that what I was teaching is not just some tales or some stories, but trade that they can implement. And so we will continue with similar trading opportunity without too much noise. Today, we'll be scanning through all these synthetics and we'll be giving trade signals. And one thing I want us to know, it is not how many trades you take, it's how many quality trade setup you see and pick. You could pick just one trade and you are happy. And you could even double your account in just one trade. So I'll be talking less today, to be honest with us, and then more of giving us trade opportunity for us to make money. Whatever trade, anytime I give a chart, honestly, just know that that's a signal. And if we're waiting to say enter to also place, exit also place, that means that we are not learning. We have not been learning. Then there was no point for this class. If I would say be giving us signal, enter at also place, exit at also place, then that means the purpose of this class has been defeated. So if I give us trade opportunity, I could give us where the key level is. I mean, key entry point and probably the key exit point. I expect you to analyze the chart and enter based on this class you have been following. That's the only way I will know that, yes, you are learning. And I gave us the two charts and I show us the trade opportunity and the possible profit that we could make in that trade and exit. So today, without too much English, I will start from, we'll go to the chart we posted today. Please, I want to know if we are all hearing my voice. Please, I want to be sure we are all hearing my voice. Are we all hearing my voice, please?
Yes,
My
sir.
voice loud and clear, no?
Yeah, it's very clear, sir.
All right, please. Thank you. Thank you. Can somebody remind me the chart we posted today? The two synthetics we posted today. What synthetic and what synthetic we posted today? Can someone remind me so that I will know that, yes, we have been following? Hello, I just asked a question. If we really saw what I posted on the WhatsApp group today, can somebody tell me which synthetic we posted today, please? Why is the class so quiet?
Yes, sorry. The synthetic you posted today, one of them was GainX 999.
All right. I needed to know one who is in the class. So
And then
you say gain 999, right?
GainX. Yes, sir.
Gain X 999. So what
And
was the
then,
signal we gave? What was the signal we gave?
okay, so on the gain on the GainX 999, our point the signal was that there was an opportunity to enter the market on.
All right. Okay. Okay. Maybe some of us don't even know what we are talking about. So thank you. Who was answering my question, please? I can't really see. Who was
It's
answering my question, please?
Mark.
Okay, Mark. All right, Mark. Thank you, Mark. All right. We posted opportunity to trade gain X999. And if you remember, I told us in this market, greed is the reason why some people lose. Greed. When you have an opportunity to make money, don't say you want to make all the money in the bank. Now I'll pick my tool and I'll tell you why I made that statement. We saw an opportunity to enter a buy here. Permit me to change the color, just maybe black. We saw an opportunity to pick this trade where this black arrow is pointing out. Or maybe let me give it another color so that some people will not be confused. Let me give it blue. All right. This arrow I'm using here, I'm pointing at. We saw an opportunity here to enter the trade. The signal I gave was a chart that was looking like this. It was looking like this. I think, yes. This other candle, black candle, was not showing. It was just this one, this arrow is pointing at. Then I said, what do you think is the move? What does it imply? Now I gave us this box, this red box, right? Let me enlarge it so that some of us will understand what box I'm talking about. This red box, I just cycle this box, this red box, this box. I squared these two candles. Don't you know this is an engulfing pattern? It's not a perfect engulfing pattern, and this candle is called an inducement candle because it's very large. Now, this candle and this one gives you an entry point, but we didn't get the candle retracing back to this point for us to enter at this point, meaning that we would have waited at the end, at the top of this candle to enter. Now, some of us might be joining earlier and be wondering, what is he talking about? Now, let me give us a pictorial example of the kind of candle we are looking for. This is the kind of candle we are looking for, something that looks like this. You can see that it's a black and a white candle. And I told us that you can pick any color that you want. This is what we want to see. We want to see something like this at a support region and the opposite in a resistance region. Meaning that at the resistance region, you will see a smaller white candle and a larger inducing or inducement black candle. This engulfing pattern is a buy signal. Now, for those of us that have been saying we don't understand candle, I have dropped this particular picture on the group showing us how to read candles. That candle shows you the high and the low. You are still confused about the high and the low. Just read this candle. The bullish candle is this lime color candle, and the bearish candle is this red color. My own bearish candle, I decided to give it a black color instead of red. So in case you are joining this class for the first time or you are still confused about candlesticks, please make reference to this chart. It's in the WhatsApp group so that you study it, so that you are still not confused and you don't keep us backward on this candle thing. Now, what do we want to see? We want to see something like this. I remember I also told us about every daily candle gives us a day candle. So if we are looking at the day chart, this is a weekly candle. The first, you count 5 candles: Monday, Tuesday, Wednesday, Thursday, and Friday. So that's the meaning of this M, T, W, T, H, and F. So today we'll be talking about key level. Key level means where you enter. So we'll be entering from key levels. We'll be looking for key levels. Apart from previous day high and low, there are key levels that goes beyond just the high and low of the previous day. So we'll look for key levels on low time frame and on higher time frame. The whole of this candle you are seeing here is telling you the weekly profile for a weekly candle. So this detail and advance going to deep are things we'll be talking on the Elite group. And I told us I don't want to begin to go advanced. Right now, it is a beginner's class. And the beginner's class, you can start making money just as we did today. This is what we want to see on the chart. We want to see key level. Let me expand it so that I understand key level. I'm expanding it now so that it will be very large enough for you to see key level. We'll be talking about key level today. Key level is where we enter. You can see this is an example of what my chart looks like. The lime color and the black color. And then the key level is, this is a bearish engulfing pattern. And the key level is where the bullish candle stops, where the close of the bullish candle. If you are still confused what is the close, I showed us here from this candle that is a close. The bullish candle has a close and has a low, right? And then the bearish candle has a low and has a high. So, and I told us that the bullish candle always close above, up, and the bearish candle always close below. So that is what we are making reference to on this chart. You can see there is a bearish candle, which is the short candle, and then there is the black candle, which is, there are two black candles here. I'm talking about the one at the top. So the one at the top, not the black candle below. The black candle at the top has a bullish candle by its side, by the left-hand side, and the bullish candle is smaller. So compare the small bullish candle and the bigger bearish candle, gives us what we call an bearish engulfing pattern. And the key level, you can see where the key level is a line, so horizontal line that shows the opening of the bullish candle and the high of the bullish candle. And we can see the bearish candle has a wick that cuts across the high of the bullish candle. So all these lines you are seeing are lines that you must understand what it means. In our allied group and in the next group, we'll be explaining what this means. We'll be talking about it in this class. In this class, it's all about making money. Our aim is for you to make money. And so you need to just know where to draw your key level. And that's why we're just showing you where to draw the key level, not to be talking too much English. Where to draw the key level, you see where the key level is, and then where the resistance for the bullish candle, which the bearish candle cuts across. Now, the same thing here, the opposite is the same. You can see the opposite here. The key level for the bullish engulfing pattern, that's a key level. The key level is the smaller black candle, and then the bullish engulfing candle, right? And you find out that the bearish candle has a low, and we draw a horizontal line as the low of that small bearish candle. The bearish candle I'm talking about is a small black candle, the small black candle. That the bullish candle, we have two bullish candle, we have two bearish candle here. I'm talking about the first small bearish candle and the first bullish candle. And you can see that the bullish candle has a wick, and you can see that the bearish candle has a low. And we draw the line at the low of that candle, which is the wick of the bearish candle, and then you can see the wick of the bullish candle, the bullish engulfing candle that pierced the low of the bearish candle. And you can see the close of the body of the bearish candle, you can see is the key level. So just master this image you are seeing. You will be seeing a lot of this image. This is giving you a buy signal, and this is giving you a sell signal from the key level. This is a sell key signal from the bearish, this is a bearish signal from the key level that sit at the small bullish candle, and this is a buy signal with the key level at the bearish close, where the body closed. So you'll be seeing a lot of this. So that's why I will be sharing this on the WhatsApp so that you master these two. This is not this is not just the two reversal signals. These are reversal signals. So it's a culmination of two candles, bullish candles. So you see what I shared with us, that image I shared with us. You can see an example of it is here. We have an example of it. We'll be seeing together how price reacts at those points. You see, that's an example that I posted on the group. This is the example I posted on the group, and we bought. Those that took the trade when this red line is our key level. Maybe let me change it. Here the limitation of this is the limitation of using MT5 or mobile. So I'm limited. So starting from tomorrow is Thursday. I think for Friday and Saturday class, for those that have laptop, or if you have a laptop, please prepare your laptop on Friday, Saturday. We'll be taking this more deeper. Those that have desktop, laptop, please, you can keep it by the side, because my tutorial that day, I'll be switching between mobile phone and desktop, but I will spend more time on desktop because we're using our premium indicators in combination to what we learn. It's on purpose I'm showing this so that you don't just depend on indicator. The indicator will only confirm what you see. So it gives you confidence to enter the market. So this arrow where it is pointing was where I shared the chart. And you can see the black color was our key level. Now, why do we take, it's not just every engulfing pattern we take. Do you notice that there is a red horizontal line that goes from left to right? And we found the weak, just like that image I shared with us. Let me duplicate this. We'll be taking trade. That's why I'm showing us this, so that we will be trading together. Do you notice that this image I shared here is what we are seeing here? Do you see this image? Is what is repeating itself live here. It's what repeated itself live here. The bullish candle, hello, somebody, please mute yourself. Please mute yourself. You see, this bullish candle might not be perfect, but well, we saw that it has a wick that caught this. This is a resistance. It doesn't matter whether it is at resistance or support. What we are seeing that we have a bullish candle with a wick that broke the low of this candle. So we drew the line at the low of this candle. And then we also saw another resistance which became a support. So we have two support. The first support is this resistance. Another support is the support that this low of this candle created. So we draw a line. So we see we have one black line and we have another line here. Let me just make it dotted so that we are not confused. This dotted black line. So it's giving us two supports. You have one here, we have one here, and we see that this candle pierced through and return above it. We only take this engulfing pattern when we have the wick of the bullish engulfing pattern piercing the low of the candle before it. Then we now choose the high. So what are we doing? We are taking the high and the low of this candle. Remember, we usually go to daily to take the high and the low of the previous day. So here we're also taking in the high and the low of this candle that is engulfed. Let me also turn this red so I understand that we're taking this one, we're taking the high and low of this candle. We are taking the high and the low of this candle. The high, this is the low, and this is the high. So of this candle, and we see what happened. So our expectation is for the next candle to close above the high and the low of this candle. And you can see we want the low to be pierced by a wick, and we want this one, the body, to close above the high. This gives us a signal to buy. So the market went up. You can just, when you see something like this, it's still okay to just buy immediately. If you're an aggressive trader, you will make this profit all the way to this point. But that is not the best approach. The best approach is to wait for market to retrace. If you have bought here, you will make money. When the market begins to retrace, just know that we are, even this candle we are seeing, it has a wick. So that means it came down. You can see buy from the bottom. Our key entry point is this line. That's why I don't want to make it dotted. Let me make it thick so that you understand the difference between the two lines. The line, this dotted line, is the first support. But this thick line is our entry point. So you enter from this point. So if you don't care all this, that this black can come down, you know that it won't come to this point. This is the sign for you that this market is going to go up. So if you have made money from this candle to this point, fine. If you entered from here, this is the best place for you to have entered, or here, any of these, either this or this, your money. If you enter here, you are entering too early. So the market will still come down and it could just scare you as the market is coming down. Sorry, I've tempered with this line. Sorry, let me just delete it. I don't need it for now. You have entered here, enter here. Look at how the market went. So now we'll look for another opportunity. Now, if you have made money all the way to this point and you sit down there, this is the way this market came down. You find out that you are in profit. The profit now has gone. Why has it come down? It came down all the way because there is a resistance, previously low and high. Market will either come below it. That's why the market came down. Even override this engulfing pattern that you're seeing here. You see the market is behaving around this engulfing pattern. This is another engulfing pattern here. This one. Look at where the market is. This big candle. Look at it. This is another engulfing pattern. And this point is this point here to this point is your key level. This small black, this small here, you can put it at the high or where the body close, any of them. Let me enlarge it. Look at it. But let me reduce so that you can see it into the future. Do you see? Market has come to the key level. Now we are careful because we take the low. This is the low of that particular key level. This is the low of that particular key level. Now, normally what we expect at this key level is why we don't take this particular trade serious. I will show you now. Do you notice that this particular bullish candle has a wick, but the wick did not pierce the low of this particular bullish candle? So this automatically is valid though. There's a way you trade this one, but I won't show us now. No. It's for the next class or subsequent class, probably for lucky Friday or Saturday. So this is a very good entry. Is the entry that took this market to this point. But I will show you how to enter this kind of market, but not for today. So that is why we didn't take this really serious. We actually take the one that pierced, which is this one. We took this one. Already the low was pierced. And that's why it went all the way. Now, you can see an engulfing pattern that is happening here. We don't really take this serious because we expected this bullish candle to be smaller, right? We expected it to be smaller, and then this one, then this. Working on this MT5 is really frustrating. Then we expected this black candle to be the one that is as long as this bullish candle, but it's the opposite that happened. So, but did the market came down? Yes, it's still a bullish engulfing pattern. Why did it come down? Fine, we will know, but for not for today. Today, let's see how we can use what we have learned to make money. So right now, I will go to another trade. I just analyzed the trade we took today. For those of us that are wondering why the market went up. Now, if you have not jumped out, I made up to, for those two trades, I made up to $34, $35, even though it's demo, but I told us it's the same thing that you can make on live accounts. On my live accounts, I knew what I made. So it's not for this class for me to say it. So anyone that took the trade should be in money. We should have made money just this short movement. These two candles is equivalent to have made good money. Let's look. The second trade we took was gain. What was the second trade we took? Can somebody remind me? The second chart. Mark told us the first one Who can remind us the second trade we took today? Please, this is an interactive class. We will soon be taking at least 1 or 2 trades. But I just need us to work together. Who can remind me the second trade we took? Why is the class too quiet? Oh, you are not hearing me. You are not hearing me.
Okay, here is a.
Sir, we are hearing you.
So please. Okay, what was the second chart we took today? The trade.
PNX 1200.
You say?
PNX 1200. PNX
800.
12.
X 800.
1200. That is 1200. 1200.
Okay, is it gain or pain?
PNX 1200.
All right, this was the trade, right?
Yeah, that was it. Yes.
This was the trade. All right. Now, do you notice something?
Wow. Yeah.
Do you notice that this was our key level?
Absolutely.
I turned it to black. Let me make it a bit bolder. Now, in this case, you might say, but let me pick my tool. You find out that this black engulfing, bearish engulfing pattern has a small wick, no matter how small it is, it has broken this level of resistance. That means that the high of this bullish candle is a resistance, and this level is a support. The previous candle of the bearish engulfing pattern, we take the high and the low. This is the low, and this is the high. So what we do on a daily time frame, we do it downward up to 1 hour, 15 minutes, 4 hours. But it's still best you do it on a higher time frame. Then you can now come back to lower time frame to enter the trade. So this is it. So you can see a very, no matter how small, you can see that there is a small wick that break it, but it doesn't matter. As long as we have a perfect engulfing pattern, right? At the beginning, probably this was happening at the resistance of the previous day or at the support of the previous day. So it becomes very valid. If this is happening at the support of the previous day, fine. This is a very good entry. If it is happening at the resistance, that means at the top of the resistance of the previous day, this is a good entry. We don't care whether it pierces it or not. The point where the thing is happening is called point of interest. Is what matters. So when you're looking for the engulfing pattern, always look at it either below a previous day support or at the previous day resistance. In the situation whereby the previous candle did not pierce the previous, the engulfing candle did not pierce the previous candle high or low. You all understand what I'm trying to say. So I don't want to confuse us. Look at the trade we took today. We gave that trade, I think, around this point. This was the candle. When I gave the trade, I think the market is either this point, one of this candle, either this bearish candle or this bullish candle. Look at I told us why the candle, look at them, they are dropping, the body of the candle are closing below the key level, this black line, which is the low of this particular bullish candle. Look at it, is the key level. Do you see the way the market came? The market dropped all the way to this point. Now, I told us, always have a goal. I have not shown us where this supports, where you are supposed to have taken profit. Of course, the profit is supposed to stop at this point. This is where the support, this is where the take profit was supposed to be. I didn't put it. I expected us to teach us not to be greedy in the market. If you are greedy in this market, in any market, it will punish you. So if you have made a good profit from this entry or from this entry, or you enter from this point, any of them would have made you some good money. And I believe if you enter with the 0.1 standard lot size or micro lot size for synthetic, there's no way from this trade to this trade would have not made not anything less than $20 on your $20 or $50 that you have. You would have made close to 50% of your money. If you are starting with $50 or $20, you would have made 50%, except for bigger account. You would have entered with multiple orders. I would have made good amount of money. So if in a day you are making minimum of $10 or $20, it's not a bad idea. So anybody that took this trade would have made good trade. The two trade on the 0.1 lot size, I didn't even we just took one candle, just one candle. Just the one movement gave almost $37. We didn't even wait for it to come down to this level. And so if the market has hit this level of resistance, you can see what is happening here. Look at this candle. It came to the low of this candle. It came to the low of this candle. Look at the bullish candle. Came to the low, pierced it, and went upward. So this was not where we trade. We waited for the market to retrace back to this point. We just wanted to enter the key level. You enter the key level. This is not the key level. This is the key level. And we enter from the key level and came down back to this point. And at this point, you're supposed to exit the market. Now, if you have not jumped out, look at what happened. Market went back and pierced back. Why did the market pierce and went back? We'll be explaining that you can use moving average to enter. If you notice, I didn't use moving average to enter this market. For those of us that we're waiting for cross, Did we mention moving average for entry? No. Already we see the moving average also confirming that the market is down. Look at it. The green, which is the fast moving average, which is the red, is already below the slower moving average. The 9 and 13. The blue is 13. The red is 9. Look at the way it came down. So now let's look for a live trade for tonight and enter. Let's see whether we can get up to 2 trades to enter. So let's search the market. Now remember, I'm doing all this on 1 hour time frame. Now I will start with, let me come to quote. Some of us may be confused. Sorry, we don't trade on FS Bull for now. The advanced class with the light group, I'll show us how to trade the FS Bull. But if you send to Flip X1. Now Flip X1 is for those that have small amounts of money. If those of us that joined us in the previous class, if you join, you remember I started trading a small account. Do you all remember? It was a $1 account. Do you all remember? Please, this is an interactive class. I need to know if we are listening to me. I started trading a $1 account. Are we together, please? I need to know if you are hearing me.
Yes, we can hear you. Some of us are quiet because we didn't start from the beginning. So respecting those who started to respond.
All right, okay. I believe you are listening. So I just want to show you how much I have. How far I've taken that $1.5, 1 point something dollars to. So I want to show you that particular count. How many of us were in that class where I traded $1 or less than $1? Are we in this class? When we traded Flip X, and then I placed a trade. Maybe some of us didn't pay attention. Do you see how much we have in that account now? I made $1.18, meaning I made almost 100% of that account. Why am I showing us this account? I'm showing us to know that if you have small money, right, it's not a hindrance from you from learning and from making money. For Flip X, you can trade small money. We don't recommend small money. We are recommending that if you are joining the Elite group, there is a minimum we expect you to have. But I'm just showing us that you can do well with small accounts. FlipX allows you to trade with 0.01 lot size. We did that talk last time. So please, I will not be going back to it. You can always make reference to our videos. So I just wanted to show us what I have done on that account. As small as that too. I'm trading and showing us an example. So that is that I made 100%. So now let's see if we can begin to take our trade. So this account has synthetic that we don't trade for now. And I'll show us how to remove those synthetic. You click on this icon, click on this trash icon, click everything here, and take out everything. Why this one did not delete is the fact that that is a trade, that is a chart that is open. So I come here and then come to synthetic. I begin to add the chart will be trading. Let me pick them because I don't want us to stay glued to synthetic that have no good setup. So that's why I'm adding the flip. I'm adding much. We are adding all this not because we're going to trade all of them. No, it's for us to scan across. Probably we will see. If we don't see in one, we'll go to the other. If we don't see in this other synthetic, we'll go to the next synthetic. So I've added them all. So this is the synthetic we'll be trading. So one, let's take flip X1, whether we see trade opportunity. Now, when we come to the chart, our normal rule, I told us, if you remember, you go to daily. When we come to daily, we pick the high and the low of the previous day. And the high permit me to pick my two. This is today candles. Just a moment. Sorry, I had a little distraction, so I just had to address it. So, our normal routine, the moment you come to your chart, you take the previous day high, you take the previous day low. Now, you add another level again, which I have not been teaching. I'm adding that one today. This is the previous day today. This is today's candle. I am on a daily time frame. When you come to your chart, you come here, you pick your day. One. Number two, the next thing you do, you take, this is your previous day. This is today. Today is Wednesday. This is Tuesday, and this is Monday. So 3 days. Look at 3 days candle. The previous day, this is the low of the previous day, right? And this is the high of that day. Then we take the candle before yesterday. Now, you can see I put dotted red line to separate this previous day and a day before yesterday's high and low. So all these two are resistance and these two are supports. They are key levels, high time frame key levels. So always look at 3 days. Normally, always look up to 5 days. 1, 2, 3, but always concentrate on the first 3 days. You take the high, what is the 3 day? The current day you are into, the previous day, and the day before the previous day, which is this. So I took the high and low of this candle, then I took the high and the low of this candle with this dotted line. Now, when I've done that, I come to 1 hour. Now, on 1 hour, I might not be able to see the resistance. That is why we'll have to put dotted line. what I am seeing here, allow me to keep this too. Okay. Oh, bye-bye. I check, you can see what is happening around the key levels. Let me go back on the daily time frame. These lines I just drew, the horizontal lines are key levels. Please, they are key levels. They are the first key levels you see. You draw them. You go on 1 hour. I told us that from the light go from Friday, we begin to talk about 4 hours. I've been avoiding 4 hours and 15 minutes and 5 minutes on purpose. I've been talking about daily 1 hour, and then at times I've also us 1 minute. But I've been concentrating on the daily and 1 hour because we need to understand how to mark out key levels and then analysis on the high time frame. It gives you peace of mind. So, having said that, we are taking the key levels of previous days of today, of the 2 past days, yesterday and the previous day before yesterday. Now, what do we see? Will we see an opportunity here to take a trade? Are we seeing an opportunity? One, we have missed this opportunity, if you ask me. Why did I say so? For the purpose of this class, you don't force a setup. When it is not there, it is not there. You have to be very careful. Now, for this 1 hour, our entry should have been here. We have missed this one. Why did I say this entry? Look at the fact that the market has left a week touching a 50 moving average, and the past move, all of them are cross, showing downward movement. Well, let's see whether we can still enter, because this market is coming down to this point. So we still have an opportunity to enter down to this level. The market wants to come. Nothing is 100% in the market. The market has surprises, but we expect that the market to touch this level. So what should we do? We can now at best go to 15 minutes, probably 15 minutes will give us an entry. Do you see how far away we are from an entry point? Our entry point should be either below or above. Look at, it's below here. The market has crossed below, leaving a week above this key level and close below. So this way would have entered from this level downward. So if this opportunity is not there, if you just enter this market, you are just entering it randomly. Why? Because you feel that it will come down to this level. So if you take this trade, you are not taking this trade from this level, which is not a good trade because your stop loss is supposed to be here. So if I enter this trade just for me to exit from this point, look at where I'm putting my stop loss at this point. It's not a good trade. So I avoid this market. I go to the next market, which is flip. Supposed to flip X202. I come here. I go to the daily. I mark up my high and low. I have marked it out because I did analysis on this market already. The market has really gone down. For my daily, I'm not really seeing a golden pattern. I come to 1 hour. Am I seeing a good engulfing pattern? Yes, I'm seeing a engulfing pattern, but it's far from where I should go. Now, let me mark the other day before yesterday. If I take it, I duplicate this candle, is this low. Still, I'm still far up, so it doesn't make any sense. I just leave this market, except you are using moving average. So it's just say, now, based on price action, candle price action, I'm not seeing an opportunity. But there's an opportunity. The opportunity is showing us here an engulfing pattern. Can we see an engulfing pattern? Yes, we say this are not, but where is the engulfing pattern happening? It's not happening at a very key level. Let me come back to my daily. Now, look at this engulfing pattern. Even if I pick this one and bring it to this low and dot it, I'm not concentrate. I will concentrate at where I should be seeing an entry. Now, why am I not duplicating this one? We are far away from it, so why should I bother myself? I'm showing us how to pick trade. I shouldn't bother myself about this resistance. Market is already here, far away. Why should I be doing resistance? So that means I have to wait for how long? So I have no business with that. So my business is this key level. Will market come back to this key level? Will it break it? So that is why then I'll come back to 1 hour. How far away? You see, I'm not even seeing it. It's far away. We are far away from it. What is the next opportunity again? The opportunity I have is here. Is here. Taking the key level of the possible engulfing pattern that is shown here. So in case you're hearing noise, it's raining here. Sorry if you're hearing any noise. So I took an engulfing pattern here. It's not the best because it's not at the high time frame key level. So I'm not really too comfortable with this particular trade. So I picked, anytime you see this dotted, it's showing key level, lower key level for the lower time frame. I'm not seeing a very good opportunity here to enter this trade. So I just ignore it. Because if I'm entering this trade, I'm supposed to put my stop loss. If I enter this trade here now, I'm supposed to put my stop loss here. So how far would this trade go? Well, this trade is only telling us that it's going bearish. How do I know? Look at it now. It has broken this support. It has broken the support and it's coming down. What is the next support this trade is going? It has broken this support. This another support, the low of this candle. It has broken it. It's going down. How far will it go? I don't have time to waste my time on one particular chart or in this synthetic. I move to the next available one. There will still opportunity. Will this market go down? Of course, if you want to take the trade, you can take it, but it's not a good trade to take. Even though the market is going down, just know that the market is going down. Your entry point was supposed to be this golfing, this bullish, small bullish candle. So it's not there. I move to the next one. Now, I pick the high, I go to the daily. Please, are we following?
Yes, sir.
Yes, please.
All right. I move to the next one. I have marked the day high and low. So if one has breached, I concentrate on the one that has been breached. And if you look at it, we are far away from the one that has been breached. Which one has been breached? The support, which is this one. It has been breached. So now I'm telling you how not to force a trade. You don't force a trade. It doesn't mean that we cannot enter, but I told you we are taking this class gradually. I won't in it gets to try to help you make money, you lose money. We are learning here to build skills. Please, we could see a trade tonight and pick it. So I gone on 1 hour. Am I seeing any engulfing pattern? 1 hour is showing me a sign of something, which is here. But it's not a good engulfing pattern. Why will I even take this engulfing pattern? Because my daily already is giving me a sign that we're in a bearish market. So I will only consider engulfing pattern for this class that supports the daily bias, which is bearish move. That means the market will retrace back to this point and continue to this point and continue upward, meaning that this will be my key level. Now, this candle does not look too good. It has wick up and down. So that's the way you analyze this kind of candle. What do you call this candle? Is it dodgy? It looks like. Please, this is an interactive class. Always, I have traders in this class, so always correct me when I'm wrong. Are we together, please?
Yes, sir.
All right. So this would have been another good sharp entry to just pick trade at all costs. You can still go on 15 minutes. 15 minutes, are we seeing an opportunity? Yes, there's an opportunity, but we are far off. We are far off. It doesn't look good. There's nothing really good to pick here, except you want to use moving average. Some people will say, but sir, you have not added RSI, the relative strength index. Well, let's add it for those that love to trade it. Then we come here, we add it. Please, if you're joining this class for the first time and you're wondering how to add it, please, you can make reference to our previous video. I suppose by now you should know how we got to this point, and then we always use 3. Every other thing the same. And then you can add at the levels. The levels we use is 10 and then 90. So I won't be wasting time on this because we are looking for trade to place tonight. And then we'll call the 10 hour oversold. So this is how I did it. In case you are saying you don't know how we did, I will call this overbought, the higher we did overbought. I hope I'm spelling it correctly. Then we'll add the midpoint. And the midpoint we decided to use 50, and we call it midpoint. So this video is available in case, and then we come and you see that we have, well, this thing is not showing us the lines. The reason being that the lines are white. So we need to change the lines to come to the level. It's giving us this color, turn it to black. We go back, we save, and then go back. Now you see we have the line shown at the dotted line. You can see 50, 10, and 90. So we are already below 50. It's telling you market is still going down. Now, we don't really do analysis. Whatever we see on 1 hour is what will give us confidence to enter the market. So we don't waste time on this. We go to the next trade. We go to 4. Now, why am I going on flip? Flip is what allows you to trade with small money. So now we're just trying to see if we can get an opportunity. Now we'll come on the daily, we pick up the high and the low of the previous day, and you can see just by looking at it, you already know where the high and low of the previous day and the 2 days is. Market is already far away from it. Then we now pick 1 hour. Have we seen an opportunity on 1 hour? It looks like. Why? Because of this candle that is here. But I told us we don't force a trade. Sometimes it's better you don't trade than you force a trade and lose money. And so we already look at this candle. Now this candle is already showing us the combination of candles. I take the low. I'm showing us how to pick key levels from ranges of candles. This is the low of the range of candle from the ranges of candle. Since we couldn't get an opportunity, we begin to look, we pick the high and low from the range of candles. This is the range of candles from this high to this low. We can see something like this. And then the high, we're trying to pick the support and resistance. We pick this resistance, the range of this candle, and we'll turn it to red. So, still, do we still have an opportunity? It looks like, but it's still not a good opportunity because if I enter from here, I'm supposed to put my stop loss below here. And my RSI below is already telling me that I am above the midpoint. So this is not a very good trade. If I just take it, I'm taking it based on the fact that, well, I'm in a buy zone. I'm not in a buy zone, I'm in a sell zone. And everything is above these first 2 moving averages. And with a target that I'm hoping that it will hit this 50 moving average. If you hit this 50 moving average, and then at that point, my RSI should have hit the 90 moving average. So if you are taking this, it's not a very good trade. It's not a very good trade. So you can take this trade by looking at the fact that how much are you risking? If it is not much, you can as well take this trade. But it's not a very good trade. Just to say that we don't have many trades here on 1 hour, you can as well say, well, let's see if we can take this trade. Now, we pick this trade for the purpose of this class, just to show us money management, because we are learning. And if I take this trade, I'm accepting the term and condition for, now I just pick this trade, term and condition for instant execution. Now I will click on this line, I'll click stop loss. My stop loss is telling me that I'm really below that week. It's saying I'm risking $57. For how much? And I take my take profit. How much am I targeting? And I say I'm targeting the next resistance, which is this resistance. How much am I targeting? $56. That means that I am risking more than what I want to get. Even if this moving average is mobile moving average, it's moving. So you will say, let me keep it here. By the time the market has reached this point, the moving average also has shifted to this point. So this is the best place to put it. And so how much am I risking? For how much? $57. It's as good as I didn't put stop loss. And so for me to know the best place to put the best stop loss, I go a lower time frame. I go to 15 minutes. Now, 15 minutes is still not giving me the best place to enter, apart from the fact that I will put it, if I enter, I will put it here. I'll put the stop loss, I'll put it below the fast moving average. I'll be risking $20 for how much? For the equivalent of $47, $44. That means that I'm risking half of what I'm trying to target. So I can click enter and buy. Now let me tell us why I even opted to enter this trade, in case some of us were asking questions. The reason why I opted to enter this trade is because this is not a spike market. It does not spike the way we have pain and gain spiking downward. This market, if it's going up, it's just normal movement up and down. It can come down, but you don't spike instantly, boom, and come down. No. So if I go back on my 1 hour, now you see where my stop loss is. My stop loss is below the moving average, meaning that the moving average is also my support, has become my support. Why? Because price has broken. If you remember the class yesterday, I told us that the moving average can also be your support, can also be your resistance. In a case when it has been broken on a high time frame, and we can see that this candle closed almost above the fast moving average, and we can see this one opening above the moving average. This particular candle open above the moving average and is going up. Now, in this kind of candle, it's not a high probability trade, or you can just watch it and catch what you can catch quickly. When the market go up, it looks like it will go up, particularly when, look at this, when, since you have, particularly of this bearish candle, I'll be explaining why more deeper on this, but not for today, please. The reason why we're entering this trade, because we are seeing this hammer here, and then we're seeing this moving average and this price closing above, and then we decided to put the stop loss below the moving average with the hope that this market might go up all the way to this point. But as I said, you don't have to wait for it to get to this point, because this is not a very good probable trade. At times we take risks in the market, and this is show us how not to take, show us bad trade and why not to take it is the reason why I enter this trade. Then the next, you go to this final under the flip as flip 5. We click normal process. We pick the high and low for the previous day. Now it's like we will have an opportunity here. I pick the resistance of. For those of us that are joining this class today, we have added how to add extra support and resistance. So I duplicate this, then I bring it to the previous day. This is the previous day. I'll bold it to show the difference between the two kind of resistance. I bold this one. It's not dotted line. Then I duplicate it. I come back and I pick the low of it. And this time around, I convert it to red, to blue color to show that it is support. For those of us that may think I'm a bit fast, please, I have to, because we don't have much time, and I won't be over talking on what we've been talking for many days. We've shown how to pick these things. Then I pick the support, because right now we are looking for trade. We need to execute. We need to make money. So, sorry, I think I'm doing the wrong thing. I duplicate. I take it to the support of this. So you see dotted line to dotted line, tick line to tick line. So that we don't mix it. So this one has to be tick line. This is how you pick the tick line. Good. So that you differentiate the two different support, the two different resistance. Now, one thing I need to pick for each chart, you don't need to be picking this tool. This tool is just for illustrational purpose, so you don't need it. It's because I'm teaching, as I'm always using this tool, so that from your own side, you know what candle I'm referring to and what key level I'm referring to. So do you notice that this candle, decided to be acting, bouncing back from this bullish candle support, heading to the previous day, not the previous day, the day before. So if we have not drawn this, you'll be wondering why would the price react here? It's reacting to the candle that happened before yesterday, which is this candle. So there is a 3 days window that market always respects those key levels to not just today, the previous day, and the candle that happened before previously. So we take the key levels of those 2 candles on a daily time frame before the current candle. So the next thing will move to 1 hour. Now, already you are seeing your moving average is in the buy region, is below the 50 region. So this look like we might have a trade that is like 75 to 80% good, even though we are coming late. So we'll go on 1 hour. Please, are we together? Are we together, please?
Yes, sir, please, we are here.
So I come on the 1 hour. You can see the market is going up. The 1 hour, we are approaching a 50 moving average, which is another form of resistance and a bit problematic. It could affect our prediction or our target. So in case the market decides to act funny at the 50 moving average. Now, I told us we are entering a bit late because we expect the market to react. This is our target, this dotted line, the support of the day before yesterday. This is where we are thinking of acting. Now, on the 1 hour, you will see that we have some engulfing pattern, which is not perfect, but it is. We cannot still rule it. And I told us that, please, when I'm analyzing on the chart window, I always minimize this indicator window so that I can have enough space. So you can see the way I drag it down. So look at this, the opportunity that is presenting itself by the opening. So a good time to enter the market is when the day is starting around 10 Africa time, our time, around 10 p.m. where this line is on. You can see what is happening around that zone. But you must not enter there, because even if the market give you this opportunity from the previous day and the today candle, this one pierced it and come up, you always wait for a retracement. Always learn to be patient. And I pick up this tool and I come here and I pick this key level. If I will follow a engulfing pattern, you shouldn't be confused at what I'm doing here. You have to scrutinize and check the market. It's not perfect, but what I told us you always look out for is this candle broke this candle low, and then the body closed above the previous candle high. This is a bullish opportunity. Now wait for the market to, if you have entered, boom, this way, it might come down. Wait for it to come down and give you another opportunity. This is another opportunity, like this bullish engulfing pattern. The body closed above the high of the previous candle. Now, this candle is manipulation candle, just manipulated you to scare you. But their key level should just wait a pending order from here. This was where you should have entered. From here, the market, you make profit all the way. Where you're supposed to jump out from, if you have entered from this key level, where you're supposed to be coming out is at this 50 moving average. You take out part of your profit, or you just jump out. The market is supposed to come back to this point. So if you still want to enter this trade, it's just like the previous one. It's not too good, except we have a very large account. Why? Because we are approaching a resistance level. So this trade is not a trade we should be picking, because the trade we entered previously is not performing too well. Why? Because we enter at a very wrong timing. You see the market is coming back. So it's not a good timing. Will it hit it? We cannot tell, because we went on a 15 minutes to take this trade. It's not really good trade. So I'm showing us good trade and bad trade. If we come on this, you can see that we are still far from the key level. So key level is the key place you're supposed to enter. And we have missed this. So we are not at the key level. The next key level, there's no any key level here again. after this key level. So the key level, you can still have another key level on top of another key level, on top of another key level. That is the what we call it. It's a structure. So we explain that structure as we progress, right? It's called order flow. So this order flow is when you have another bullish engulfing pattern that happens here. So we are not seeing any bullish engulfing pattern. Well, even this one is a small bullish engulfing pattern, but it's not a perfect one. It's not a good one. So you don't force a bullish. If the market does not print a very bullish, good bullish engulfing pattern as a support, please don't force it. So let's leave the flip. The flip, we're not getting a very good opportunity. So we come to the master spikes, up and down spikes. We'll come on the daily. We pick the same procedure. So we look for opportunity. Now, what I'm doing now is, even if later I see an opportunity, I will drop it in the chat, just the way I did in the morning. So you always have to put your notification. So I'm doing this in live trade. Does not mean that we must find an opportunity. If we don't get it, as I said, we will not force it. We will not force it if we do not see an opportunity. And because I don't trade on 1 minute of counting candles, when you cross, you enter, is the reason why people, you will make money now, is the reason why people are losing and are getting angry. Why are they losing? So please, I don't trade like that. If you are expecting that, please, my trade pattern and my trade strategy is capital preservation and to make money. I do trading as a ministry. I am a servant of God. I see this as a ministry. And so I owe God the responsibility to make sure I teach you people the truth and nothing but the truth. As the Bible says, it's the truth that sets you free. And so I am doing that in a very good conscience. So please, if you are not comfortable that we are not making money, you want us to make money now, please, my apology. I will apologize to you, but I owe God the responsibility to teach the truth and to ensure that we make money. I will know. You could see opportunity in the pain or gain, and good, you can monitor your trade after. So I am picking the high and the low of the previous day, and as I told us, I put the dotted. So I won't concentrate on the high because already market is not there. So I concentrate on where the price is at the current. I pick so I'm making opportunity at the lows. So I mark those levels. Are we together with me, please? I'm just showing us how to mark levels. You don't have to mark every level. So if you are starting early when the market opens, that's why you need to mark up and down because you don't know which direction the market is going. Now we have a clue of where the direction has headed. So we mark the levels prior that the market has breached. So we come to 1 hour. Already, we all know that gain market, I told you how to know whether it is spiking downward or upward. Is come to 1 minute. You know whether the spike. That means that on this gain, the spike is upward. Come back to your daily. I know that this is counting candles. So those that enter this market, if you count candle, if you enter counting candle, you are counting candles, you will make good money. You will have less spikes. That's what it means. Now, what was the key level? Well, this one will come on the daily time frame. You see what happened here. Market breached and came down. We missed this trade. If you want to expand the indicator up, well, it's telling you that we are already at extremely over. So you can see moving average. You can see the relative strength index. We are relative strength index telling you that we should be looking for opportunity to buy. So will you be buying below the support? You don't buy below the support. You sell below the support. So the relative strength index is not rhyming with our strategy. Already the support has been breached. This market is just counting and counting downward. Already your opportunity to abort as little as this candle you are seeing and this candle is telling you that the market will go down. Look at the reaction of this candle. Look at the reaction of these candles. Or below this moving average on a 1 hour. It's telling the market is coming down. So since we're on gain and pain, let's go on 15 minutes. Maybe 15 minutes will give us an opportunity to enter. 15 minutes, we didn't see any good opportunity to enter. than using moving average. That the price have broken below the moving average and is pointing down. So you would have entered at this point. Still, we are far. If we enter from this market, from this point, this market could spike upward. But even if you enter, you could still count the candle, but just be prepared that the market will spike. But the fact that it will spike does not mean that it will not return. But already, you are not at a very positive, good opportunity. At this point, you are vulnerable to market spike. You are at vulnerable point. Your relative strength index is already telling you are oversold. So why should you be selling at this point? So if a spike happens, you wonder why this spike taking my money. Good spike can happen in order to return back to this particular support region, which has automatically become a resistance point. When a support is breached, it becomes a resistance, particularly if it's breached and closed below it, it's resistance. So this point now, if market is spiking of going back to resistance. So at this point, you should be thinking of buying. Buying. That means you are hunting for spike. That is what it means. At this point, if I enter this market, I am hunting for spike. So I can set my stop loss. So as it stands now, if I enter this market, I can set my stop loss. It will work. So this, let's take another trade, which is not a good trade, but for the purpose of education, so that we'll understand that at this point, you are only gambling. This is gambling. I'm just being honest with us. If you enter this market at this point, you're just gambling, hoping that it will spike. So why? Because not, I won't say 100% gambling. You are actually buying because the RSI is telling you that you are at the buy zone, extremely buy zone. So at this point, the market can spike at any moment. And why this trade is not too bad is the fact that you can limit how much you lose, in the sense that you can choose your stop loss, because the spike will not be against you. You're actually going for spike. If it does not spike, you're only losing $2 or $3 or $5. So let's give an example. This trade, if I enter this trade and I now say, fine, let me take a buy because I'm suspecting there will be spike. And a good place to do that is actually on your 1 minute. So you can do it on 5 minutes. So let me say I want to set my stop loss. So please let me reduce this. Now, 5 minutes will be better because I'm okay. Let me say go to 5 minutes. Let me put my stop loss. I put my stop loss. Let me risk. You can see it's showing $1.5. Let me say I'm risking $3. What I'm saying to this market is that, well, if it does not spike before it reaches $3, this is what I'm giving to the market. No wahala. I'm ready to let go $3. You can go on 15 minutes to know you can get a perfect place where the market will have a rest. You can see we are not seeing any support close by. We are not seeing any support close by where we can say we are putting stop loss below that support. We don't know. But with the market spike, you cannot predict when this spike can happen. And you can see, do you see the counting can do you see how long it has been going? Because today it's not a spiking day. Will the market spike? Of course. As we are talking now, it could even spike, but we don't know at which point it will spike because we are at a no man's land. So I cannot say I cannot allow this candle to keep on counting against me too long. I expect it to count because it has gone far. This spike, this candle has gone too long. So let me risk. The goodness of this is that I can choose to risk just $1, 50 cents, 10 cents. This counting day will respect it because you're not setting the stop loss against the spike. You are putting it in favor of this. In case, do you see that it has spiked? So you have made some money. This is how the spike happened. Now, where do I put the stop loss? I cannot say in such situation, this is the best way to put your stop loss. You put your stop loss above the counting candles. Now, you're actually saying, this stop loss you're saying is showing me 0.9. I'm saying I am closing, I'm hedging, I'm putting a wall. In case this market decides to still count down, we don't even talk about take profits here. You're talking about stop loss. You use your stop loss as take profit. This is hedging or breaking even. I'll now say, if the market keeps on counting candle keeps on coming against me, well, fine. Take me out at $1.13. So far now, I have 1.65 cents. And if you look at it, it's counting downward. You see 1.63, 663, it will come in at 62, 61, 60. So in some cases, you just jump out. You just jump out. I'll also show you how to enter this kind of trade. This 1.6 something could be equivalent of $10 if you have entered several times. And the same way, the stop loss, the risk should be much more. So in situations like this, you don't just be greedy because you know that today is not a spiking day. You don't expect much spike. The market can count down to a level. Don't be greedy. Just come out. You have made 1 point something dollars. Fine. You have made $1.6. Just come out. You have just wanted a spike. You just made 1 point something dollars. Now, mind you, this was not a good trade. So any moment from now, it will hit our stop loss. Look at the way this 1 minute. You just come on 1 hour. You see the way the market is coming. It's coming down, and then it's not a very good trade because we entered a very wrong time. This way we should have entered. So now, as much as showed us good trade, as also show us bad trade. Will it hit our stop loss? I don't know. Where was supposed to stop loss supposed to be? In case my stop loss supposed to be here. In case you don't want, but what if the market comes down to this point? You have lost enough money, which is not good. So you reduce money management, you reduce how much you give to the market. Please, any question? Any question, please?
Yes, just a quick one, sir. I noticed that you have $3,000 on this demo account. Is it a second demo account? Because I blew mine yesterday and I'm trying to open another one, and I'm saying nothing less than 3,000.
Yes. This demo account you saw, I started with $200. In fact, with $100. I have like 3 demo accounts. All of them, this is the minimum. The other one is $4,000. I had to open 3 demo accounts for research and development, and all of them I started with $200. So this is another demo account that I built. So you can open another one.
Okay, what I'm saying is I'm trying to open another one for the same $200, but then I'm not seeing any option for that. The minimum I'm seeing is 3,000.
No,
That's
there
what I'm
is.
wondering.
Scroll. Just
Okay.
if you scroll it, you see 200. Hello, are we together? Please, any other question? Any other question, please?
Good evening, sir.
Good evening, please.
Good evening, Mr. Elijah. Thank you so
Good
very much.
evening. Good evening.
So please, I want to ask. Yes, please, I want to ask. When
Yes.
setting your resistance and support zone, like how many resistance and support zone can one set?
You're supposed to set.
Let's say
You're supposed to set 4. You're supposed to set 4. 2 support, 2 resistance. You don't do for today. Today is out of it. You do of previous day. In today, we use what we call the range of candles, and we're not talking about today. We're not talking about because Friday, Saturday plus